Good morning. Welcome here to Trader Minute. Great to have you aboard on this Monday morning. Probably pretty cold across the U.S. here today. Hope you're all staying warm. Those of you who are in the Floridas and the Texas and the Californias can rub it into us, but for the rest of us, it's still quite chilly. We're looking here at a very interesting market this morning from a pure just technical standpoint. And what I have up here is the 1 minute chart of S&P 500 futures. Okay, and we're looking here. We see a little bit of sell off into the close on Friday. Okay, where the market sold off about 6-7 points here into the close. And then basically Sunday afternoon, open up futures were pretty much flat, and then we saw this big drop right here. And this drop was on some of the Chinese data, and more particularly the PMI data. And the PMI or flash PMI data is a measure of manufacturing. And it's a very volatile number. It's volatile no matter where it's measured, whether it be the US, Europe, China, Japan, wherever they're producing that data. It tends to be a highly volatile piece of data. And for China, it came in weaker. We saw the Australian markets open lower, Chinese markets open lower, and then they kind of stabilize for a little bit, and we start to see this slow march up. And what happens? Well, we start to get some of the European data that started to come out, Germany PMI or European PMI data, and we start to see futures shoot higher. And now, instead of being down 10 points, S&P futures are up. They are up about 10 points right now. Yeah, Cricket. Let's see here. I'll zoom in just a little bit here for you. With the zoom in, I can kind of show you the bottom here. Okay, this is kind of some of the bottom here that happened last night. And then here's the European session, stock futures moving higher. And then here this morning, they've kind of just continued just slightly higher. We've had some data, some manufacturing data here this morning, but nothing major. I mean, what's the key here in the U.S. right now? It's all wrapped around taper and the Fed, and are they going to taper, and what's going to be the result, and whatnot there. And there's a lot of ways you can look at tapering. If I put my fund manager hat on and I go back to my fund managing days, heading into taper, I have to be long. Heading into Wednesday, I have to be long. That's the way the markets have been. That's the way it's been all year. When the Fed speaks, market tends to go up. I have to be long into that. I can't be short. Now, can I build some protection in there? Yeah. Can I add some extra protection for a fund? Sure. When it comes to the challenge here, overall, we're not necessarily having to build protection, right? I mean, our protection is in the challenge in and of itself, but should be some very interesting action here this week, and we'll continue to talk about it. Couple things here. Let's take a look at our positions. We have LinkedIn and Tesla, and both positions, there's not really much of an indication on what they're going to do here this morning. LinkedIn's trading just a little bit higher. Really would like to see LinkedIn get back above 230 early this morning and continue to trade above 230 the rest of the day overall. So far, it's indicated to open just slightly above 230. And then Tesla here indicated to open about $1 higher, kind of back into most of Friday's range, kind of erasing some of the Friday morning sell-off. Now, as far as pre-market and Tesla and LinkedIn, do the pre-markets mean anything for them? Not necessarily. I mean, there's no news on really either of them, and we're dealing with futures that are up, and so it's not, the pre-market isn't necessarily a big deal for either LinkedIn or Tesla. If we do see LinkedIn start to break 228 here this morning, we will back out of that and live to fight another day. A couple things here this morning. Apple was upgraded again this morning. Several downgrades on Twitter happened this morning. Twitter's been on a major run. And then two downgrades come out this morning, just basically talking about valuations being stretched here with Twitter. We also had the hotel sector. They came out and sorry, the name is slipping my mind. Who came out and upgraded them? But they basically came out and upgraded all the hotel stocks from Marriott to Hyatt to Host Hotels. They basically upgraded all of them, and so the action in these hotels should be very interesting. Marriott, especially compelling here overall, as it's had a rather bullish consolidation going on here. It starts to get back up. Pierce 47, 47 and a half. You see this push up in a trend rider bull signal, vibe bull signal, and pushing on higher there. Yahoo here. Cricket, you were asking about Yahoo for a trade into the end of the year. I mean, the trend here on Yahoo remains strong. I can't argue against the trend at all. Volumes continue to be bullish. Could you argue it's a little bit stretched? Sure, but it doesn't mean it can't get up into the 42, 43 area. I would use, if I were getting into Yahoo here, I'd use 39 as a stop parameter there. YRCW, beautiful move on Friday, big move up. YRCW, this is a trucking stock. It has absolutely been ripped this year and ripped hard. And one of the things we're seeing with the market up so big here this year is some of these stocks that have been bottom feeders or underperformers this year are starting to get bought into a little bit early. And I'm not sure what the news here on YRCW is, Momo Trader, but overall that's a pretty strong signal. That said, how do you manage the risk? I mean, you're talking about a $2.50 up day. Just to even go down to 11 isn't really bearish, right? But overall, that's one that can be very difficult from a risk reward standpoint. Okay. AIG, yeah, worry board. AIG gapping up here this morning. Very solid action here on AIG. Okay. Verizon was also upgraded this morning and looking to bounce this morning from a kind of oversold position. Verizon didn't quite create any sort of bullish candle action here Friday, but getting a bounce on the upgrade here this morning. AKS, I mentioned AKS on Friday. AKS here is not really going to be very strong this morning after some of the Chinese PMI data and what the Aussie dollar is doing. But I still like AIG. I still like it higher. I'd like to get into it, but I'd really like to see it close above 6 to say, hey, I'm ready to get aggressive there for it. Okay. So those are some of the things that are going on pre-market. Again, most everything's going to revolve around taper and the Fed here this week, and what are they going to do and the fears there. Think about it from a fund manager standpoint. Those that rule the market here, what are they doing? They have billions of dollars. What are they doing ahead of a potential taper? And when you talk to people, it's about a 50-50 of people who think Fed's going to taper and people who think they don't. They're not going to taper. Personally, I don't think they'll taper, but, again, who knows with the Fed. So what is a fund manager doing? What is the big money doing? Well, last week, they start buying protection. This week, they add maybe a little bit more protection, but overall, they have to be long. You have to be long into this. You can't set up short given what's gone on over the course of the year. Can smaller fund managers, can traders set up short? Yeah, they can. And if you're going to set up short ahead of the Fed, just make sure you have your risk managed. but overall, it's a market where the fund managers are going to be positioning here in the next for the next 2 days ahead of the Fed. All right, so markets opening up here. Everything's going to open up just slightly higher. I shouldn't say everything. We will see a little bit of weakness in some of the oils, in some of the materials because of the Chinese data. Exxon continues to be strong. CL, yeah, let's go take a look here at CL. It's up slightly here on the open. And this is one of those where it has the downside trigger, the trend rider bear signal. Overall, though, these trend rider bear signals have not been very effective during 2013. It pushes lower a bit on Friday, kind of gapping up. Look, if you're short CL, there's no reason to get out here, as it still trades below the 7. Okay, if it starts to trade back above the 7, that's where I would get nervous there. Okay, I'm very interested to see kind of where things are opening this morning in terms of sectors, in terms of the staples. Here's the XLP. Consumer staples up about 15 cents. Not really a whole lot there. Utilities. They're probably up percentage-wise one of the bigger boosts here this morning. Energy not up very much here at all. Materials, they're up slightly, but from a percentage standpoint, not too much. But the CL is very much like many of the other consumer staples. It's one of those where, hey, it gave bearish signals, and to snap back and go higher off these bear signals wouldn't be very surprising. They are going to move ahead of the Fed. Okay, they are going to move with the Fed because they are interest rate sensitive. The Fed is going to have an impact on the TLT. In fact, I will start pricing out some straddles here, one with the TLT ahead of the Fed here. Okay. MasterCard, Visa. Yeah, I talked about Visa Friday, my favorite chart out there. Continues to be beautiful. Nice move this morning here on Visa. Visa had the breakout over 205 on an upward trend, upward consolidation, bullish MACD, trend rider trend rider bull, vibe bull signal, and pushing higher. 215 is the price target there for Visa. MasterCard, it's going to kind of, it had the big gap, right? So it has a little more consolidation. So with Visa, you're dealing with something that's breaking out right now. MasterCard, you're dealing with a gap. It comes down to personal preference. What do you want to deal with? Do you want to deal with a bullish gap or a bullish breakout? Discover. Notice Discover lagging Visa a little bit, but same chart pattern as Visa. Discover starts to trade up in the 53.80, 53.90 area, would be strongly bullish. Capital One, which I'm not nearly as bullish on, just from a fundamental standpoint, doesn't have the same patterns as Discover, Visa, MasterCard. This is one I'd actually rather be on the short side than the long side if I was going after that sector there. All right, been a couple minutes. Let's take a look here. Tesla up about $1.60 here. Okay, nothing, no real news. I believe it was Jim. You made a good point here this morning. There was some news out this weekend about shorts piling into Tesla, or some of the short sellers getting back into Tesla. And absolutely, and that's one of the things that's going to happen with a high flyer like Tesla. Okay, the short sellers. Basically, your short sellers are not necessarily short-term traders. What they are willing to do is they're willing to set up a short position and wait it out. Okay, and back in my fund managing days, if I wanted to short Tesla, what I would essentially do is put price targets on it. I'd say, you know what? I'm going to go and allocate 25% position here. Let's say at 150. At 165, I'll add another 50%, and I'll add another 25% if it gets to 180. and then also put maybe some downside targets to kind of pile in short as it's working. But the short sellers will actually look to get in incrementally, and the more Tesla goes up, the more the short sellers are going to start to get in because the valuations on it will have shifted there. LinkedIn here. LinkedIn erasing most of Friday's losses here with it up about 216. Friday was a bit concerned about it, closing below 230, but we had that 228, 230 support level. The lower Bollinger Band this morning pushing back up above the 7 hour. A nice move. Obviously, we need to see that hold. If we kind of look at the hourly on Tesla, kind of a similar type of a thing potentially happening. Would be really nice to see Tesla push above 150 and be able to hold that here today. Yeah, Jimmy, Apple. Apple here was upgraded again this morning, and Apple was upgraded Friday. In fact, the price target was put on them at 700 on Friday, and Apple kind of had that 1 hour in the morning where it just went down and then stayed flat the rest of the day. Is up another $2.5 here today on an additional upgrade price target up to 650. For me, for Apple right here, it's still a little dangerous to touch. I'd either need to see it break above the 7-day moving average or kind of get more fully back into some of the retracement levels, even down to the 20-day moving average to feel more comfortable about that. We have the MACD kind of in the wrong position here. I do think Apple may have another charge into the end of the year, but right now I don't find a great entry point, right here for Apple. Yeah, Jimmy, Morgan Stanley just gave Apple an upgrade to 630. Okay, yeah, it doesn't surprise me. They're these fund man, the analysts are kind of using this pullback in Apple to pile in on their upgrades there. Disney. Yeah, Disney here. Disney here has held up so well around 70. Yeah, it's been volatile between 71 and 69, but it has really held up at 70 very nicely. We had this kind of cup and handle breakout back here in August, September. We had the breakout happen on very light volume. But the breakout has continued to hold. The price target here is about $73 here on Disney, and so far continues to hold up very well. Has seen some selling come in at the 70.5 area, but all signs continue to point higher there for Disney. All right, so Tesla, nothing really to react to there. LinkedIn, nothing really to react to right here. With these types of growth or these types of high flyer stocks, they're not necessarily going to perform very well on a day like today. With market futures up big, other things are going to be going up. Other things are going to be strong, and more of your kind of normal stocks rather than some of your high flyers. If the market does stay strong throughout the rest of the day, we would expect some of the high flyers to start to play catch up. But when the market starts to make one of these turns off of a potential bottom, we tend to see some of the more common names bounce the most. Exxon, very, very strong move here on Exxon, pushing up, heading up to 100. I know a couple of you there are in Exxon. Probably things like DuPont here today. Very nice bounce off of 60. In fact, talk about a beautiful upside entry setup here with DuPont. Very positive action overall after this kind of consolidation. It's been holding on to 60. We have some confirmed support here at 60 to expect a breakout there. Very strong here for DuPont. Pepsi. Okay, Pepsi has been kind of coming down to the 200-day moving average, getting down towards this 81 mark. This is a very interesting place to kind of be a buyer of Pepsi, but no real major confirmation on that just yet. Before the market opened, we talked about these hotels, the Marriotts, okay? The Marriotts, the Hyatts, and the upgrades that came into these. You'll notice how these things are gapped up, pushing back above the sevens, and really we're seeing that across the market. If I come in and just run a simple scan, basically all I'm going to do is look for stocks that are making fresh moves above the 7-day moving average this morning. Out of the S&P 500, 76 of them are. AT&T, Verizon, JP Morgan, McDonald's, FCX, Disney, Met, American Express, all of these are making DuPont, which we looked at. All of these are making fresh moves above that 7-day moving average this morning. That's very bullish Monday morning action. And, if you're looking to buy in, you're looking to pile into something, you take something that was on your watch list, something that you liked from a fundamental standpoint, and you say, hey, making a move back above the 7, now's the time to potentially be a buyer here of that stock. UPS, for example, which has had a very bullish consolidation, making that fresh move back above the 7. FedEx, okay, same type of issue, same type of action going on there. Okay. Is it dangerous to buy this morning? No, not necessarily. I mean, you're talking about the Fed is going to be on tap here Wednesday. The market's going to move, but you want to know what your risk is heading into the Fed release Wednesday at essentially noon my time, 2 o'clock Eastern. And as long as you understand what your risk is at that moment, it's fine. So to get into something here today, nothing really too dangerous about that. All right, Tesla, LinkedIn, we'll give them a little bit more here this morning. I will kind of get with Carl here a little bit. We'll actually look to pull one of these off. I'm not quite sure which one yet, but we want to free up some cash to get into something different. Another one of the trades that's out there, some of the stuff that's actually showing signs that, hey, it's ready to move. Tesla, though, and LinkedIn, there's nothing bearish about them. My biggest concern here is LinkedIn as far as those two positions are concerned. Verizon, short-term target on Verizon to the upside. Verizon is not something I would mess with today on the upgrade. I've messed with Verizon on upgrades and downgrades, and sheesh, the way those options move and the way the stock will move, it's more of a lottery ticket. Overall, basically you have Verizon coming back and retesting support. If it has some good volume, you are looking at Verizon going to a new short-term high, 51.52. It would take some Fed action there to make that happen. Okay, Jones, AK, you bring up great points. AKS has moved above 6. FedEx ready to pop. Yeah, and these are reasons why I want to pull one of either LinkedIn or Tesla off so I can go in and get into some of these that are showing signs that they're ready to go. Is it a little bit early to kind of to do that? Maybe, but that's why here today we'll be looking at pulling one of those off and getting into one of the others. McDonald's, this is very interesting action on McDonald's. You have an extremely kind of exhaustive bearish candle here. You get the little harami type action, not a true harami, but a little harami type action. Gap up here today, pushing back up above 95.5. Very bullish action. Very bullish action there. Okay. Nice trade, huh? Very nice. Alrighty. So again, there's a lot that's out there. Was asked about gold this morning. I'm still not a huge fan of gold. Not a big fan here. I need to see gold hold above 122 for a few days for me to even kind of get interested in playing gold to the upside. IBM. This is one IBM has come down to support. IBM's relatively cheap here. The earnings have been pretty soft in moving lower. Is some of the European PMI data enough to help it? Maybe, but IBM, I kind of want to see this trading above 175 to really get in there. AK, Jeff, for day trading, do you have a specific time chart and EMA crossover you look at? I've heard using the 5 minute chart and using the 7 and 34 EMA. Yeah, AK, there are a ton of day trading strategies out there. My favorite is looking for reaction highs and lows, and then playing those. That's kind of my favorite. I do like using a 9 and an 18 EMA, which is a little different than the 8 and 34, but basically being a buyer on 9 and 18 EMA crossovers. And I've used it on a minute chart, I've used it on a 5 minute, I've used it on a 15 minute. Essentially, for day trading, if you're going to use a strategy where you're using crossovers and moving averages, to me, one of the most important things is to make sure your time horizons correspond to each other. So don't just use a 5 minute, don't just use a 10 minute, don't just use a 15, but pick a couple time periods. Pick an hourly, a 15 minute, and a 5 minute, and get them to match. Okay, wait for them to match. So if you're going to use the 8 and 34, you're looking for a bullish cross. Make sure that matches on the 5, make sure that matches on the 15, and make sure it matches on the hourly. Your percentages are going to be much higher for success there if you have matching time periods. Okay, will that eliminate some of the other trades that could potentially work with it? Sure, but overall, that's kind of what I would look at there. All right. Well, thanks for hopping on. I will be back on here very shortly. We'll kind of look for. I'm going to go out and just look at a couple things here on LinkedIn and Tesla, and I'll be back very soon. Take care.